Welcome back to Be Rich, and my good nephew and good friend Shashwat Swaminathan is here. So, this is one stock he's been badgering me to buy for a long time, and something which we will buy when the market comes down this time. The stock is Intel, and it once upon a time when I was his age and slightly older than him, the world was dominated by Intel and Microsoft. Today, Microsoft remains a big powerhouse, and Intel has fallen on the wayside, and Intel has become a value stock from a growth stock. Intel was the original growth stock of my times. It was started by Robert Noyce and Gordon Moore, and then from there it just crashed and it has fallen off the pedestal after one of its last founders, a charismatic Hungarian Jew, passed on. The reason for success of Intel was Andy Grove. Andy Grove made Intel what it is today. Why is Intel such a famous company? Intel started by making soft magnetic cores in competition with the original manufacturers like IBM, and started replacing computer memory with the soft magnetic cores. What happened is the Japanese like Hitachi started making it better and faster, and their yields was better, and Intel was almost forced to go out of business. At that time, 90% of Intel's business was softcore business, and was the Intel was almost dead and out for the count. The famous history is, and it's a case study in Harvard, where Andy Grove had a chat with Gordon Moore and asked him, what would somebody do if they bought Intel? He said, they will dump 90% of the business and concentrate on the microprocessor. So Grove said to Moore, why don't we go out of the door and come back through the other door and do the same thing? They did it, the rest was history. Today, you know Intel only as a microprocessor company. In fact, the entire range of personal computer revolution was driven by Intel. Intel created processors, and all the computers in the world ran on Intel processors. Then AMD started to give some competition, but AMD was always a poor cousin because they were just imitating the chipsets of Intel. Intel became a behemoth. The PCs, the servers, and the chips on the motherboard, laptop, everything ran on Intel. And y- they used to give those chips away. The motherboards used to be given by Intel, or you could buy motherboards made by other companies such as Asus, and you could assemble your own computers. And that was my business, and I did that business for many years. And I never thought a day would come when Intel would vanish. But the end did come when the world moved from laptops to tablets and handheld devices. Intel was never competitive in that. Intel, like Microsoft, missed the wave when it and lost to Google. Similarly, Intel lost the wave when it couldn't make the transition to mobile chips, and Nvidia and Qualcomm drove the change, and Intel paid a heavy price. It was also around the same time that Andy Grove had died of prostate cancer, so nobody saw it coming. In fact, the book I remember, and one of my favorite tech books on management, is a book written by Andy Grove called "The Only the Paranoid Survive." And well, after Andy Grove, the company was not paranoid enough. Too many professional CEOs came. They started managing the company for Wall Street. They borrowed money to give dividends. The company had its enormous free cash flow, doesn't need to borrow, but it borrowed to give dividends, and lot of talent left the company. And one such person has now come back to run the company. So Intel will be in better times. Luckily for Intel, what happened is that while the mobile revolution took off, storage became very big business. And so people had to store data on cloud. And for that cloud, these server chips are still made by Intel. And that revived Intel, and Intel has become a big company once again. But the fact remains, Intel missed the mobile revolution, and that is why it has become a value stock. Shashwat, any questions? I given you a brief overview of what is Intel.
So, yeah, you keep saying that Intel is a value stock, which I agree with, because if you look at the price to earnings ratio or PE ratio for Intel, it's now at 9, which is pretty low even compared to other value stocks. So, and this is supposed to be a tech company and it has a CAGR of above 10%. And it's predicted to continue that same CAGR for another decade or so. And so, why do you think that a company with a predicted CAGR of around 10%, give or take, for the next 10 years is being valued at such a low PE?
Because there is no future. See, what happens is tech is valued for growth, right? We check Google. Google itself has only 23 times earnings, and Google is taking moonshot bets. What are the moonshot bets that Intel is going to take? There's no announcement on that. Is Intel going to create a breakthrough technology? In fact, Intel is famous for Moore laws, which says the amount of transistors that can be put into a micron will double every 18 months. And now we have gone past that. So, what is Intel bringing to the table? Intel is a company like Coca Cola or Pepsi, making chips which can be used to make computers. But computer sales are declining, laptop sales are declining, and most of the time it is Apple which is being sold. Intel has an agreement with Apple to sell chips, but it's not good. Apple will buy chips where it is cheap. So, what is Intel's USP? Intel's USP used to be a campaign called Intel Inside. So, unless they have a charismatic man like Andy Grove who can visualize the future and take this hardware company into the future, there is no doubt that Intel will survive for next 10 years. But what will happen after 10 years, nobody knows. So can Intel become the chip capital? There is an opening now, in the sense there is a huge shortage of chips. All this chip shortage is because these chip companies had not made enough investments in time. So instead of borrowing money to give away dividends, had Intel borrowed to invest in R&D and D and making chips, then it would have been a growth company. But Intel has sacrificed growth to please Wall Street and it's now paying the price.
But recently, if you look at the numbers, in the recent past, now using their free cash flow both to give out dividend. It has a dividend yield of around 3%, which is pretty good for a tech stock. But also, they have an R&D 382% more than any of their competitors, be it Nvidia or AMD.
But where are the results?
And they've also used some money for acquisitions like Google. They've started to make some acquisitions from
I think
2017.
I don't know the name. The new
Mobileye, yeah.
the guy who has joined is an ex guy who should have been the CEO. They bought an outsider, he resigned and went. And after the stock went down, they brought him back. But I don't know whether he'll be able to change the way Intel is going about it.
So you think that just pure money is not going to get them anywhere? They also need good leadership.
No. You are in comparison with the tech stock. I don't know what is going to happen. But a cloud is here to stay. And if they don't leave the leadership in server business, they will not go anywhere. They'll be there. So it I'd rather value, like, instead of comparing it with a tech stock, you should compare it with Apple, or not with even with Apple. You should compare it with Procter and Gamble and Coca Cola. But when I look at Coca Cola and Procter and Gamble, it's still very cheap. This is because there is a huge debt overhang. The moment they clear the debt, it will come up by to about 15 to 20 times earnings. This is what I think.
But as of late, they've been cutting down on debt, and also their return on equity is actually much higher than Nvidia or AMD.
Everything is granted. But what is the future? That's where I said they need leadership.
So, what do you think Nvidia is doing right, which Intel isn't?
They got the imagination of the world in terms of its graphics and gaming chips. Some cool kid like you doesn't knows about Nvidia. He does not know about Intel. That's where the problem is.
And how do you think the recent chip shortage has helped boost their numbers or hamper their numbers? What do
It
you
will
think
boost
about
their
it?
numbers, and it will also mean that they are going to set more fabrication plants. They will come to India, and they think they will are going to set up fabrication plants here.
They've recently acquired a firm called tower semiconductors,
Meta,
which
which
is
is going to set up a plant in
yeah,
India.
yeah,
But the point is, are they going to be the next exciting thing in
tech.
tech? Then it will have a value like Nvidia. Yes, but we will take a position. That is, you and me will buy a position in Intel. But I do not know whether the world will buy it into Intel or not. We like value stocks, we'll buy it, it's cheap, it's 3%.
There's a margin of safety.
There's a huge margin of safety, and I don't mind putting some money into it. But whether it will be the future growth engine, that I do not know. If it happens, you are extremely lucky that you got Intel in a bad phase, like those who got Microsoft in a bad phase after Bing, and the value didn't go anywhere when this man knew Satya Nadella took over,
Yeah.
till he decided to put all his attention onto cloud. So what is the new CEO going to do is something we need to find out.
So coming to margin of safety, they have a big free cash flow, which is about 9% or so.
So they have huge free cash flow, and they can free cash flow can take care of debt. They are giving dividends at 3.5%.
Yeah.
And then there is also a depreciation of the rupee for me. So I see myself in a good position to buy it and keep it for 10 years. But whether it will grow into a big company, the same logic that is there in ITC is there here. But whether they are going to, like ITC and has invested in other companies, whether this Intel will do something is something only a tech specialist has to say. We have a couple of friends in Intel, we should chat with them and find out.
But you do see some potential.
No, I see a lot of potential as a value stock.
And what about its future as a possible growth stock? Do you see any future?
I don't know, because I'm not a techie. But if they can't break through in mobile, it is very difficult. But maybe they'll break through in mobile. I don't have an idea at all.
Okay. Thank you.
Thank you. So it's a stock that you must buy. Like he said, it trading at 9 times earnings. It has huge free cash flow. Its dividend yield is 3.5%. Somebody living in India, it's a great buy. Thank you for watching. Be rich.
If you'd like the video, please hit the subscribe button and hit the bell icon for you to get our notifications. And also please share it with your family members and friends and relatives. Thank you.
Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.